Hello and welcome to our third set of slides for week one. Okay, we're going to look at financial statements. And financial statements are the reason, the formal reports of an entity's financial information, basically showing us, plus with a little analysis, how the company's running and then its current status as far as success. Financial statements are our main source of information for carrying out decision making and management functions. Basically, if you're a business owner or manager and you don't understand financial statements, you're going to be in a bit of a spot. And this is why we have a whole course on it. So the idea is, let's have a look at financial statements, see what's in front of us, understand what's in front of us, and then hopefully down the road we can make some better decisions. And of course, the third one being the balance sheet, which tells us or gives us a snapshot of where the company is right now in terms of assets, liabilities, and equity, which is also quite important. Now, on the income statement, we have usually some sort of line that represents money coming into the company for things we've done. That might be just one word revenue or one word sales. I've seen a couple others depending on what country you're in. And we might have something known as net revenue and net sales. After that, we have cost of sales in this course. Up until now, you've probably seen cost of goods sold. And remember, these are expenses, cost of goods sold expense and cost of sales. So revenue minus our cost of sales gives us our gross profit, minus our operating expenses gives us operating profit, or depending on what format your accounting's using or you are using, might be called earnings before interest and taxes. Okay, then we take out interest, gives us earnings before taxes, and then we take out income tax, which gives us earnings after tax or net profit. Again, depending on what you're used to or what your accountant's used to. Now, a closer look at sales or revenue. The top line is sales. That's how much we sell. Might see it as gross sales or gross revenue. Minus our returns and discounts gives us our net sales. Okay, and you may see either one of these, sales or net sales, gross sales, revenue, net revenue, on your income statement. Usually, to save space and all that sort of thing on an income statement, we'll see net sales. And this means that this is the number of the dollar value of the sales we had after people have returned goodies or we've made discounts or allowances for returns or things that haven't worked out, discounts, allowances, whatever the case may be. Okay. Most income statements don't show the net sales, don't show the sales and returns and allowances because it takes up too much space, and usually they're not material. So if you got sales of $1 million and you've got $10,000 in returns, $10,000 is not considered material when it comes to the returns department, so we don't really show a separate line anymore for that sort of thing. Now, a quick look at cost of sales, also known as cost of goods sold. If we're going to do the cost of goods sold calculation, we have beginning inventory minus our add our purchases, freight in, and any direct labor and wages. And of course, if we've got direct labor and wages, we're usually looking at some sort of a manufacturing setting. Okay. That altogether usually gives us our cost of goods available for sale. And if we net out or take out our ending inventory, we're going to have our cost of goods sold, cost of sales. And I'll talk about cost of sales in a second, onward. In this course, I'm going to use cost of goods sold relatively rarely. And that's a bit of an older way of looking at things because most of the new businesses in Canada were things like buying and selling, like retail or manufacturing. But in the last 20, 30 years, most of the new businesses starting have been service businesses. So it's more effective to call cost of goods sales what's happening instead of cost of goods sold. So cost of sales is what I'm going to use in this course because it applies to all three: manufacturing, retail, and service businesses. Now, gross profit is pretty simple. If we have net sales or gross sales or net revenue, gross revenue, revenue, sales, whatever it is, It's our top line. Right after that, we're going to have a line that says, okay, this is how much it cost us to get those things ready to sell. Okay, so whether it's candy bars, um, chairs we've made, or putting somebody out doing carpet cleaning, cost of sales is going to come out of our sales, and we're going to be left with something called gross profit. Okay, now I'm kind of spending a bit of time on cost of sales, i.e. cost of goods sold, depending whatever you're looking at, because it is fairly important. Cost of sales is an expense. It's a cost of sales expense. Usually includes all the variable expenses incurred to the point where an invoice or bill of sale is generated. Now, variable expenses are those expenses that go up and down if your sales go up and down, or when your sales go up and down. Okay, so if you sell 10 candy bars, it's going to cost you less money than if you sell 20 candy bars. Okay, that's only common sense because you have to buy those candy bars. The more you sell, the more you have to go out and buy so you can resell them. Okay, so the cost of sales is a variable or a direct expense. Now, your rent might go up once a year and your insurance might go up. That means it changes, but it's not in the true sense a variable cost. Okay, it doesn't matter how much you sold in those two cases. Okay, one of the things to remember is sales commissions and delivery expenses happen after you make the sale. A sales commission, if you're paying a salesperson, is not earned until they actually make the sale. So it goes under marketing. Now, the more you sell, the more you have to pay that person. Yes, that's true. But in the true definition or the true accounting sense, we don't count sales commissions. And then we have to deliver it as well. We don't count those as cost of sales. Now, when we're going to manage the company, a true manager or business owner will count sales commissions when he's doing some ratio analysis. But for the true sense of the word right now, we're just going to look at cost of sales as being the costs associated with getting that product up into ready to sell up into the moment we write an invoice. Okay, so that's it for this slide deck, and we'll have a couple more shortly.